If you've been looking for a step-by-step plan on how you can build wealth or become a millionaire, you are in a right place because that's exactly what I'm going to be going over in this video. For those of you that have never seen me before, my name is Jaspreet Singh. I'm the founder of a company called Briefs Media, and my financial education journey kind of started on accident because growing up, I grew up in a traditional Indian house. My parents told me or beat it into my head since I was a kid that I had to become a doctor if I wanted to become successful. And the reason why is because my parents were immigrants from India and they didn't have a lot of financial education. And so when you come from that type of mindset, you want to become successful naturally. And the way that you become successful that many of us believe is that you go to school, get a good grade, get a good job. And when you get a good job, well, then you're going to have the ability to make a lot of money and then you're going to become wealthy. I kind of found a different path because I started my own entrepreneurial ventures when I was in high school and then in college, and I had a little bit of money saved up. And by the time I was 19, I was studying for the medical college admission test, which is the test you take to get into medical school. I had some money saved in the bank. This was 2011. Real estate prices were at rock bottom. I read some money books, and every money book said that wealthy people invest in real estate. I didn't know what that meant. I didn't know any real estate investors. I also had no idea kind of what that was, but I was like, well, if wealthy people own real estate, I want to own real estate too. So now I'm studying for the MCAT. I'm bored out of my mind, and I start looking at real estate for sale. And again, this is right at the bottom of the 2008 crash where real estate prices were selling for pennies on the dollar. I took the medical college admission test on August 22nd, and on August 23rd, I closed on my first rental property. It was a 1,000 square foot condo. It had originally sold for $150,000 a few years prior, before the crash, and now it was on sale for $8,400. That was the total price. I bought it for $8,000, put in a few grand worth of renovations, and then rented it out. And that was the first time I'd ever experienced any sort of investing or this type of cash flow. I did not know you could do this before. Now, I made a ton of mistakes. I'm going to ignore them for this video because it's going to make this video very long. But that was my first real exposure to actually seeing the power of financial education, because now I was putting my money to work, and now I owned this thing, this condo, this investment property that was paying me with a couple $100s a month in profit without me having to go out and do something. Like when I was working before, I had to go to work or I had to do something in my business to get paid. But here, just because I owned this asset, I was getting paid. And that completely changed my mindset on how money worked and how financial education worked. And so that was when I decided that I'm not going to be a doctor. Now, the story gets a little bit longer, so I'm going to condense it for you here. I ended up becoming an attorney because, well, when I told my parents that I didn't want to be a doctor, my dad told me that if I wanted to keep any pride in the family, I have to at least become an attorney. That's immigrant families for you. But I became an attorney, which gave me the opportunity to go to school part-time and work in my business full-time. And so that's kind of where I started my journey, and I continued to work on my financial education throughout that. But what I want to do today now is I want to go over what are the things that you can do step by step, especially let's say you're getting started with your wealth. You don't know where to get started. You don't know where to start investing your money. You don't know what to do with your money. How do you use your money as a tool to become wealthy? And what steps do you need to follow that we can actually become a millionaire? And I'm going to break it down for you in 6 steps in this video. So if you stick with me till the end, you'll know exactly what you need to do. And let me start with step number 1, which is you got to start with the money mindset. Now, I do want to let you know as well that my team at Briefs Media has a free ebook titled How to Build Wealth as an Investor. If you want to read this ebook, you want to use it as an additional resource. It goes over some of the things that I'm going to talk about in this video, but in even more depth. So if you want to download that ebook, it's completely free. It has a ton of resources on how do you start investing, how do you generate cash flow, how do you manage your money. There's a ton of resources in this ebook. It's completely free, and I got that link for you down in the description below if you want to get that ebook for yourself. Now, when I talk about money mindset, it's a little bit different than when other people talk about money and mindset, because for me, I had a kind of negative association with money when I was growing up. I thought that wealthy people are bad, rich people are evil, yet at the same time, I wanted to go out and become a doctor. That way I could be rich. So it just didn't really make sense to me because on one hand, we want to be financially free. On a second hand, we kind of look negatively at other people who have money. And when you have this negative mindset and association of money towards other people who have money, it's going to make it very difficult for you to actually go out and become wealthy because you yourself don't want to go out and do something that you think is bad, right? Just naturally, we try to avoid things that we think are bad. And so you have to start changing your association with money. And this is where you have to understand how money plays a part in your life, because the reality is It costs money to eat, and it costs money to feed other people. You need money to survive. There's a lot of people who talk about how money doesn't matter. Oh, you don't need money to be happy. Look, at the end of the day, you can't eat without money. You can't have a roof over your head without money. You can't go on a vacation without money. So you need money. So how does money really play a part in our lives? Because there's a difference between understanding money and then becoming this money hungry, money greedy, this money just, those people, the negative association that people have with money, just the people that are just obsessed over money. What's the difference between that? And the difference is understanding that there's more to life than just money. That means you have to understand you have to take care of your physical health. You have to understand that you have to take care of your mental health. You have to take care of your spiritual health. And then you have to take care of your financial health too. All four of these things are needed if you want to live a happy and fulfilled life. It's not just having money, but having money is a core component, because if you don't have money, well, now you can't take care of your physical health. Maybe you can't go to the gym. Maybe you can't eat the healthy foods. And so now you're stressed. That also affects your mental health. Maybe that means you're around negative people. Maybe that means you can't get the therapy or the help that you want. Maybe that means you lose your sense of purpose because you're always worried about how you're going to pay your bills. So the lack of money can affect every single aspect of your life. But having more money by itself is not going to fix the mental health part of your life. It's not going to fix the physical part of your life. It's not going to fix the spiritual part of its life. All of these things are separate, and you need to take care of each one of these things if you want to live a happy and fulfilled life. Money is just one part of it. Being financially fit is just one part of it. It's an important part. That's the part that I'm going to be focusing on. But you have to remember that your physical health, your mental health, your spiritual health are all important as well. And if you want to live a happy and fulfilled life, because that's what everybody wants, there's no point to be rich and miserable. That doesn't do you any good either. You have to be fit in these four areas. And those are the four places you want to make sure that you're investing your time and your resources into, because that's what's going to allow you to live a truly fulfilled life. More money is just going to give you more resources to do more of the things that you love. Once you understand that, then you have to understand that you can become wealthy. And this one is difficult. And the way that I saw this and really realized this was I was a guest teacher for a little while in Detroit public schools. I would go there every once in a while just to talk about life and leadership and motivation and money and just life. And these high school kids were hardworking kids. Many of them only had a single parent at home. Many of them have seen a lot of crazy things in their lives. Many of them were growing up in rough neighborhoods. Some of them were in gangs, so it was a tough area. And when I talked to these kids about things like money, one of the things that I tried to do, or I like to do, was get people excited about becoming successful. So I would ask questions like, what's your dream car? To get people excited about maybe one day I could have a Rolls Royce or a Lamborghini. But when I would talk to these high school kids about their dream car, the answers I would get were things like a Dodge Challenger. And I was like, well, don't you want to get a Rolls Royce, Lamborghini? And the response that I would get to that is, oh, I could never have something like that. Somebody from where I'm from can never have something like that. And when you tell yourself, especially as a kid, which is crazy to believe, when you tell yourself that you cannot have the nice things, when you tell yourself that you cannot become successful, when you hear this, some people like to call it that victim mentality. Let's avoid that for this video. When you hear this negativity, it is going to be impossible for you to become successful. Not because you don't have the resources, not because it's not possible, but because you have shut yourself down. And this is where I want you to understand that becoming wealthy is just as much a practical part. It's just as much a math part as it is a mindset part. The reason why some people become successful isn't because they have something different in their DNA. It isn't because they're gifted necessarily. Maybe they are in some instances, but it doesn't mean that they're just a special person. Many times they're just crazy enough to believe that they can do something big. And that crazy belief is what drives a lot of people to want to go out and do things when everybody else says it's impossible. And this is where, if you feel like you struggle with this, if you feel like you have a negative association with money where you've ever said, or you recently have said something along the lines of, I can't become successful, I won't become successful, it's hard for people like me to become successful, I don't know if I can do it, this sucks. Like, if you have that negative association with success and wealth and abundance, what I want you to do is you need to start by investing in your personal development and your self-development. Go read books by people like Tony Robbins, other personal development, self-development books. Go read 5 of them. Find the 5 most popular ones that you can find that have a lot of ratings, a lot of positive reviews. Just go out and read them. I don't care which ones you read. Go out and read 5 of these books. Because what you'll see happen Because if you go out and you invest that money, it'll be less than $100. But if you invest that time into reading these 5 personal development books, you are going to completely change the way that you think and that you operate. And if you can make that investment, not just of the money, but of the time to commit to changing the way you think, I can guarantee you, you are going to start living a completely different life. Because then what's going to happen after you read those 5 is you're going to say, I want to read a 6th. I want to read a 7th. I can't get enough of this because I'm seeing the opportunity. I'm seeing the abundance. I'm seeing the ability for growth. And then you can start working on the practical side. But if you cannot get past that mental hurdle, that mental barrier, it is going to be impossible for you to succeed. I call this show the Minority Mindset Show. And the reason why is because your mindset is the foundation for all success. And the majority of people have a broke mindset. The majority of people have a loser mindset. The majority of people have this mindset where I can't do it. Somebody like me can't do it. It is too hard. It's too difficult. It's whatever. And when you give yourself that negative mindset, it is impossible for you to succeed, which is why you have to start with the mindset first. I know I'm hammering on and on about this, but this is so important because if you do not have the right mindset, it's going to be impossible for you to succeed. Now, once you start building that mindset, this is where we can move on to number 2. The second step to building that wealth, to building that millionaire status, is you got to lay the foundation. If you want to build a home, what do you do first? You got to dig the foundation. If you want to build a mansion, what do? You dig a deeper foundation. So this is where you have to now take a step back. This is going to seem like a step back for a lot of people, but you got to take a step back before you start worrying about investing, before you start worrying about putting your money to work. You got to lay the foundation for your finances. And that means you got to do 2 things. Number 1 is you need to go out and save your first $2,000. If you do not have $2,000 saved up, you are in a financial danger zone. You are in the danger zone because it can be anything that can trip and put you into credit card debt. Anything can make you trip and go into a payday loan. And that's why the very first thing you got to do is you got to get out of the danger zone. And the way you get out of the danger zone is you got to save that $2,000 as fast as possible. And the second part to laying your foundation is you got to get out of the high interest debts. The payday loans, the credit card loans, the credit card debt, all these things have to be paid off before you start worrying about investing, because these things are skinning you alive. Now, the funny thing about this is I've had a lot of people come to me and ask me things like, how do I start investing when I have $4,000 in credit card debt? Now, the interesting thing about this is your credit card debt is costing you 15 to 25% a year in interest. The stock market might get you a 5 to 10% return on your money. A risky 5 to 10% return on your money is less than a guaranteed 25% return on your money. Because if you pay your credit card off 1 year early, that's a guaranteed return. If you invest your money in the stock market, there's no guarantees. You might make money, you might lose money. And that's why here, the very first thing you got to do is you got to lay the foundation. That means you got to get out of the credit card debt before you start worrying about how do you put your money work into other places. And this is one of the reasons in Briefs Media, we have something called Briefs Academy. Briefs Academy is our educational platform where we have a bunch of classes. We call these classes journeys that you get access to for one subscription price. But one of the rules that we have for people who want to learn about things like real estate investing, money management, stock market investing, and all the other stuff is before you start investing your money into Briefs Academy, you cannot have any credit card debt. We don't allow students with credit card debt into Briefs Academy because, well, if you have credit card debt, we'd rather you take that money and pay down your credit card debt first because that's going to give you the best return on your money. So pay down your credit card debt before you start worrying about how you do the other things with their money. And when you are working on this foundational building, the thing that you need to understand here is this is the time where you have to make the most sacrifices. This is the most extreme sacrifice stage. And this is where right now, if you have credit card debt, if you don't have $2,000 saved up, listen, you are going to have to make some serious decisions. Things like no more eating out, things like getting rid of that car, things like downsizing the apartment, things like selling some of your stuff, things like not going on that vacation. These are not fun decisions to make. But right now, you got to lay that foundation, because until you lay that foundation, you can't start building upwards. Until you lay the foundation, you can't actually get any real wealth. And the faster you can lay the foundation, the faster you can start building that wealth, which is why right now you got to get serious and you got to make some serious decisions and some serious sacrifices to get out of this financial mess that you're in. Once you finish laying the foundation, this is where things can start to get more fun, but that's why you got to get out of this foundation digging place as fast as possible. Once you do that, This is where we move on to step number 3. Remember, step number 1 is working on the mindset. Step number 2 was laying the foundation, working on how do you live smaller. That way you can pay down the high interest debt and save the first couple $1,000s. Step number 3 is now you're going to put your money to work. And this means now you're going to start investing your money. Now, I'm not going to do a whole analysis on how you invest your money in this video, but the 3 asset classes that have built more wealth than any other asset classes over the last century are real estate, meaning rental properties, stocks, and businesses, things like starting your own business. So what you want to do now is, as you make money, you don't want to spend all of your money. You want to take a piece of your money, I would say at least 15% of your income, and start putting this money to work. Now, if you don't know where to put this money, you can also invest this money in your own education. You can also use this money to pay down your other debts, your lower interest rate debts. But if you want to become wealthy, you want to have assets to pay for your stuff, you have to start putting your money to work. Now, there's a couple different ways that you can invest your money. Like, you can invest your money for cash flow, or you can invest your money for appreciation. Cash flow means you buy an asset, and it's going to pay you just for owning it. That means you're buying something like a stock, and every 3 months, the stock pays you a dividend. It's cash flow you get just for owning this asset. It's something like buying a rental property, and every month you're getting paid by your tenant because the tenant's paying you rent for living there or using your property. That's cash flow. Appreciation is you're buying a stock for $100, hoping that you can sell it for $200. Appreciation is you're buying a rental property for $100,000, hoping you can sell it for $200,000. I prefer investing most of my money for cash flow. The bulk of my investments are cash flow investments because I like the cash flow, because I like the idea of just stacking cash flow. This way, I don't have to worry about selling my investments. I can just keep working to slowly buy more cash flow every week, every month, every year, where I just want to keep stacking the cash flow. Now, the nice thing about this is whichever one you choose, you do not need a ton of money to start. There are so many resources out there, and I want to keep hammering this home. You don't need $10,000. You don't need $100,000. You don't even need $1,000 to get started. You can get started with less than $100. You just got to figure out what it is that you want to invest in, and then set up a system. If you can invest $50 a month, start with that. Just start with $50 a month and stay consistent no matter what. Every single month, put aside at least $50 a month into your investments. Now, you might feel like $50 is nothing. Well, what you got to remember is it's $50 a month every single month. And if you keep doing this year after year after year, eventually, if you stick with this, you're going to find ways to do $75 a month, then $100 a month. And then the money you put aside is going to start stacking, and then it's going to start earning you a little bit of money too. Now, as you start earning this a little bit of money, you can take that money that you're earning and invest that back in there. So you start slowly starting to see the growth of your money. And if it starts paying you with cash flow, you just reinvest that back in there as well. And this is where small baby steps compound and stack on top of one another. But you have to get started, because the thing that holds so many people back is they assume, oh, $50 isn't enough. I got to wait till I have $2,000. I got to wait till I have $20,000. I got to wait till I have $100,000 to get started with my investments. And with that mindset, you are slowly killing your ability to become wealthy. But the key is you just got to get started. That getting started is the biggest step. And then just keep throwing money into it. Now, what you will see happen is you will see markets go up. You'll see markets go down. But the key is you just got to keep attacking your investments slowly, 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 because that's going to give you the opportunity, the best chance to ever become wealthy is by investing your money. Now, again, if you want more step-by-step skills and education on how to do that, you can check out the free ebook that we have. It's down in the description. But the key here is just to consistently keep investing your money again and again and again. This brings me to step number 4, which is knowing how to spend your money smartly. And the thing you want to understand about spending is that most people follow what I like to call a net zero mindset with money. And a net zero mindset is, I have $1,000 in the bank, I can spend $1,000. And this is a broke way of thinking. Now, the funny thing about this is the traditional Indian culture is a save-heavy culture. It is, I make $1 to spend 20 cents. And that's why you'll see Indian doctors making a lot of money, living in tiny homes, driving crappy cars because they want to save a bunch of money. Now, I'm not saying that's the right thing, but I'm saying that's the traditional Indian culture. The American culture is, I'm going to make $1 to spend $2. With the help of credit cards, with the help of lines of credit, with the help of other forms of debt. And this also is not a good spending culture because, well, this is the reason why so many people are broke if you spend all of your money. What you want to do is you want to be investing your money, which we talked about in the previous step, But you have to break out of this net zero thinking that if you have money, you got to spend it. That's the first part. The second thing is when it comes to what you actually afford. And the first thing is when people think they can afford something, they think I can afford the monthly payments. I want to buy a $1,000 phone. I can afford it because I can afford the $50 a month payment. But that's not you affording the phone. That's you trying to make the payments, and that's completely different from you being able to afford the phone. If you want to be able to afford something, the first thing is you cannot be financing it, especially if it's not putting any money into your pocket. Now, the exception to this would be something like your home, not your car, your home. But if it's not putting any money in your pocket, you got to make sure you can pay for it with cash. You want to buy a car, pay for it with cash. You want to buy a phone, pay for it with cash, not finance it. The next thing people say is, well, what if it's 0% APR? Can't I get it then? I mean, that's a smart decision because I can invest the difference. Now, let me talk about this for a second, because what does 0% APR mean? If you want to buy a phone, a $1,000 phone, and you can get it for 0% APR, that means you can just pay it off in installments of $50. Why wouldn't you do that, right? I mean, there's got to be a reason that they're doing this for you, because if you wanted to go borrow $1,000 from the bank, they're not going to let you have that $1,000 for free. They're going to charge you money. You go to borrow money for a home, they're going to charge you money. You borrow money in a credit card, they charge you money. How is it that these companies can give you 0% APR? How do they do that? Well, the reason why is because 0% APR is extremely profitable. Why? Because the first thing that happens is if they can get you to buy this phone at $50 a month, 0% APR, then they can also get you to buy the AirPods. They can get you to buy the other accessories to go along with it because you don't feel that same financial pain. Why don't you just put those on 0% APR as well? So the first thing is they get you to buy more stuff. This is statistically proven. And then the second thing is if you don't pay it off in time, which a lot of people don't, now you get slapped with very high APR. So it's a double whammy. That's why 0% APR is so profitable for companies and banks. It's not because they're giving you free money, it's because they're getting you to buy more stuff, and then they charge you interest when you can't pay it off in time. So if you want to start buying things, you want to buy things, make sure you can actually afford the total cost. The next part is you want to make sure that you're not spending all of your money to go out and buy this thing. If you want to go out and buy a $1,000 phone, I like to follow the rule of 5, which says if you cannot buy 5 of them, you can't afford one of them, especially as for things that are not necessities in your life. You want to buy a $1,000 phone? Fine. You better have $5,000 in your bank account if you want to go out and buy the $1,000 phone. This is going to allow you to really build wealth and control your spending. Now, is it easy? No, I never said this was easy, but if you can follow these rules when it comes to your spending, it is going to allow you to have more money for your wealth. That way you can become wealthy instead of making everybody else rich, because our economic system runs on spending. When you spend money, somebody else gets rich. I want you to get rich first. I want you to have all the nice things. I want you to have the nice phone. I want you to have the nice car. I want you to have the big phone. I just want you to be able to afford it first. The fifth step in the system, if you really want to become wealthy, if you want to become a millionaire, is now you're going to work to earn more money. And notice how I put it here. I didn't put it number 1 because most people assume that when I have financial problems, the first thing I need to do is make an extra $10,000 a year, that would solve all my financial problems. But statistically, what we've seen happen is when the majority of Americans make more money, they end up in a bigger financial hole. Why? Because you make more money, you drive a bigger car. When you make more money, you go on a nicer vacation. When you make more money, you got to celebrate and show it off. And this is why so many people will make more money and end up broke, and so many Americans making 6 figures a year are broke, living paycheck to paycheck. There was a study I just read before this that said 60% of Americans making 6 figures a year or more are living paycheck to paycheck. It's crazy. But this is where now earning more money has the most power when you know how to use your money. In the last steps, we talked about how to use your money, and this is where now earning more money has the most power, because now you know how to spend less, you know how to invest your money, you know how to spend your money, and this is where earning more money has the most power. Now, how do you earn more money? There's a lot of ways. If you're working a job, see if you can work more hours. Maybe you can work to get a raise. Maybe you can work to get a promotion. Maybe you got to get a second job. If that's not going to cut it, maybe you work to get a career change. Maybe you got to get a certificate. Maybe you got to go back to school to get a different career. If that's not going to cut it, maybe you create a side hustle. If that's not going to cut it, maybe you go out and create a business. I don't care how you work to earn more money. I don't care if you're an employee. I don't care if you're an entrepreneur. I don't care the way that you're generating the income, whether it's through your own job or through your own business. The key is you have to work to earn more money so you have more money to invest. That's how wealth is built. Most people assume that your wealth is built through your salary, But that's not true. Your wealth is built through your assets. What's more important than how much you earn is what you do with what you earn. And that's where right now what you have to understand is you are working to earn more money so you have more money to invest. I call it a decade of sacrifice. And the reason why this is so hard for a lot of people is most people can't assume that I'm going to put in the work for a decade. I want to have the money, I want to have the fun, I want to have the freedom today. Well, you can keep spending today, but eventually that decade's going to go by. And then after that decade, either you're going to be in a bigger financial hole or you can be wealthy. That's for you to decide. And that decade of sacrifice means you're going to be putting the work to live smaller and earn more. That way you have more money to invest. Now, the funny thing about this is your friends and family are going to look at you like you're the crazy one because maybe you downsize your car. Maybe you start living a little bit smaller. Maybe you don't go on that vacation as often. And now everyone's looking at you like you got financial problems, when in reality, you're the one that's building wealth now. Because see, when you're looking rich, you're staying poor. But when you start earning more and you start investing more, you don't look like you're rich because all your money is going to your assets. You can't show off your investments the way you can a Gucci belt. But this is going to give you that opportunity. It's going to set you up to actually become wealthy and buy all the nice stuff without having to worry about the money. So, when you start earning more money, remember, the key is you're earning more money. That way you can have more assets, not just so you can keep showing it off. This brings me to step number 6, which is protect your assets. You got to know how to protect the wealth that you've built, because as an attorney, who's not your attorney, I can tell you that America is the most litigious country in the world. And when people realize that you have money, they can try to take their hand, put it in your pocket, and take some of it for themselves. This means you got to start investing in the right attorneys to protect you. This is things like estate planning attorneys. These are things like just general attorneys who can protect you if you have a business. How do you have the right entity protection? How do you have the right attorneys to protect you in case you get sued? There's a saying in business that if you haven't been sued yet, you haven't been in business long enough. Then you also want to start investing in things like potentially tax attorneys or tax advisors. You absolutely need to get a tax advisor if you have a business. If you're investing in real estate, you have to invest in a tax advisor. And there's a big difference between a good tax advisor and a bad tax advisor. And I can tell you because I've had both. A bad tax advisor is just going to file your taxes. A good tax advisor is going to handle your bookkeeping and then meet with you regularly and tell you this is what your tax liability is and here are your tax strategy options. That's where the money is. So look for a tax advisor that's going to help you come up with this tax strategy. That way you can lower your tax liability. Then, in addition to that, you want to make sure that you have the right insurances in place. Maybe it's life insurance, maybe it's health insurance, maybe it's your other types of insurances in place, business insurance, because, well, insurance is a headache to pay, but it's a small price to pay that can prevent a much bigger headache in the future. These are the ways that you can start protecting your assets, and as you build more wealth, your attorneys and financial tax advisors can help guide you with more advisors that you might need. And yes, these are a bigger expense, but you have the wealth now to fund it, and you're using your wealth to fund these people to protect your bigger wealth as well. And if you start following these steps, I guarantee that 6 months from now, you're going to be living a completely different life. And 2 years from now, you're going to look back and see a completely different person financially because of the steps that you've been taking and because of the learning that you've been doing to build your wealth and build the real financial foundation for yourself and your family. If you want to create a step-by-step plan on how you can become a millionaire, there are only 3 things that you have to master. People love to overcomplicate this, but there are only 3 things that you have to master. Number 1 is you have to understand and master the outflow of your cash. Number 2 is you have to master and control the